All right, we
look who's
back.
back.
Welcome. The 5ers Live Trading Room today, live, making money live with us. Alex, Victor,
Look at that
welcome.
energy. Goes on holiday and he comes back with all his raging energy.
Yeah, that's
Hi, everyone.
That's
A new fresh
yeah,
start of the week.
Hell yeah. Let's do this. Raining money. I think you can remove that guy now.
Yeah, he's taking the stage a bit too much.
All right, guys. Hope you're all having a good time. Had a good weekend. Hope you're all relaxed. You've had a relaxing weekend. You're ready to get back into the market. You know, it's Monday. This is the day that we've all been waiting for. The market has opened. Unless you're in the crypto market, of course, then I feel sorry for you, honestly. Not just because of Bitcoin dumping, but also because we don't get any rest. It's like I'm getting these alerts, on Sunday morning about, Cardano, hitting a certain level and stuff like that. It's not fun. So, if you're trading crypto, you should probably take a break during the weekend. I'm going to lower that volume a bit on the music. Why is it so loud for me?
For me, it's not that loud.
No, for me, it isn't either.
Well, it's super loud for me. Let me see. Is there something up with my headphone? It's super loud. Let me check that. Can we just pause it? Like, is there something wrong with it? I'm just gonna pause it. There's something not right about that one. It's in the background. I can't think. It's just way too loud.
What about this one? Or was that the same one?
It's still super loud, and it's the same one. Yeah, let's just pause that one. I am so confused with that. Okay. Thomas said, what music? I don't know, but it's gone now, so now I can focus. What's up, Lewis? Hope you're doing good. I haven't forgot about you. I think you the guys are supposed to send coffee to. Yeah, I got my coffee roasting machine up and running. I'm gonna get you some nice Trader's coffee. I ordered like some fresh beans of Robusta, right? Robusta, you got these two beans. You got Arabica, and then you got Robusta. And Robusta is supposed to have way higher caffeine in it. So that's what I need. I feel like that's what I need, especially today with Monday. Okay, so the title of today's live stream is "Your Edge Starts with a Plan." So I wanted to make this the main subject of the live stream because I've also gotten some feedback from you guys, the viewers, saying that you wish that sometimes we stick to the subject, and I completely agree with you. Sometimes we have a subject and then we kind of get out of topic, but sometimes it's just a natural flow of the conversation. We start talking about something and then naturally we go into another subject. But today I want to be focused on planning our trades as much as possible. But obviously we're going to be here for 2 hours. It's a long time, so what I do. And this is like one of my most important edge in trading is actually planning my trades. So every weekend, Sunday evening, when the kids are gone to bed, the markets are closed. It's only me, a whiskey and a cigar, and the trading view, right? And I'm not drinking alcohol though, so it's alcohol-free whiskey, which is pretty boring. Anyway. So I'm going through the markets, right? And I'm making my plans. And sometimes I forget about it, right? Sometimes I'm just busy during the weekends and I don't have time to do the planning. And that shows. I'm looking at my statistics, I'm looking at my journal, and it really shows. The weeks when I haven't made any my plans on the weekends is just worse. It's always true, right? And sometimes I forget about it and I do my planning on the Mondays. And it's so distracting because when the market is open, you go through the market and you might find a pair and you might see a setup, right? So instead of planning, you're actually in the trading mindset, and that's two different mindset, right? You got to do the planning. What is Alex doing? Oh, he's standing up. Welcome to the stand up club. Victor, are you standing up?
Yes, I am.
Holy man, it's amazing. We're all standing up at the same time. Look at us standing
Stand up.
together. Okay, so now I forgot what I was saying. So Victor, maybe you can tell me what do you do when it comes to planning? Why do you think planning is important, or do you even think it's important for you?
No, it is. It is. I think it doesn't only go with trading, but I mean, in life in general, if you don't plan things deliberately, then it's very difficult that things can run efficiently, because, the universe doesn't work on your, it doesn't work
The
for you.
universe
You
doesn't
have.
work. You can just end there. That's a great point. The universe does not work, Victor.
No, but the universe doesn't. I mean, you have to, if you want to be efficient, be effective in your day, you have to have some planning. I mean, before you even start thinking about, loading up your platform, you got to have your day planned out. For example, in my case, what I do is I start with some me time. That's the first thing, right? I start from, to me, that's starting from a strong mental place, right? I start with a me time that can be meditation, but that can also be exercising, or actually it is both in my case. But it doesn't matter. It's something that you start with a right foot, uh, and something that is reflective. Like, how do you plan? What is it to today? What is your goal? What do you want to be doing today? What do you want to be improving on? Things like that. That's even before I start trading. So and then, because I don't swing, my setups are I need to start looking at them each day. So I can't be doing that on the weekend, because I don't know yet. They haven't formed yet, the structures, etc. Since I trade intraday. So those are the things I cannot do on the weekend. On the weekend, I'll do something like, in terms of macro, more from a distance. How is my trading going? But during my day to day, it's more about, okay, what are the next steps? Okay, I'm going to start today. I did my me time. I will start with the analysis, and if I have a setup, I will stop everything else and focus on the setup. So from the time of my trading, right? I have a specific window where I trade on. And after that, if I don't, then I need to be reviewing, the week that just passed. And if I'm at the end of the month, I will be reviewing the whole month. Basically, and that's a deliberate planning that I have in advance. It's not something that I think that's the best thing I need to be doing that day. No, that's something I have planned in advance, and I think it helps a lot, because if you don't have a plan, you will not be you will lose oversight, right? It's not gonna be, you got to be organized in everything you do, and especially in trading. So to me, it's the blueprint of your day. If you don't have a plan, you might be losing time and not doing the right stuff that needs to be done. That's
Yeah.
what I think. And at the end of the day, I finish with self-assessment, to how did I perform, in terms of, did I follow my plan or not? What are the things that I can be improving? What did I do well? And then closing. So I'm starting my day with some reflective moment, and ending it with some self-evaluation, which is also a little bit reflective about, self-critical, right? How am I doing it right? And if I did, then I should be, celebrate it a little bit. Okay, I follow my plan. I may not have won this day, or maybe I did, but I follow my plan, so it's a winning day. And that's during the day. But periodically, you should be doing that on your weekly performance, on your monthly performance as well. I think those are the and another thing I think needs to be addressed is, for example, when do you refine your strategy? Is that something you do, when the strategy stops working completely and it's not profitable anymore? or is it something you do periodically? I personally think you should plan on, system refinement or your strategy refinement periodically, deliberate planning on that. So plan some back testing, some reviews, checking if everything is still performing the way they should be. I mean, not only you, but also the strategy in the market. And if you don't, you're gonna be, you're gonna be not ahead of the curve, but instead, waiting reactive, and that's not a place where you want to be in as a trader. You want to be anticipating things, right? When your edge is eroding, you want to be anticipating that before it starts hurting you. But that's only can be done if you have a plan and if you plan deliberately to attack those issues.
Yeah, and I think we when we talk about planning, I think one of the most important things for me is on the weekends I'm planning, and then on the weekdays I'm trading. So for me it's two different things, right? When I've already done the planning on the weekend, I don't have to plan anything on the week. That's all I have to do is just follow the plans. And so what I do is, and I can go over to my screen here, and I'll show you what I have here in TradingView. So this is a current open trade on ADCAD. I'll break this down after this, and I'll talk a little bit about my new approach here. You guys know before vacation I talked about comparing my trading with two different strategies. One where I'm taking profits at half an hour, and one when I'm taking profits at 1 hour. And right now what I'm doing is I'm trading the half hour setup, and I've done that all through last week while on vacation, and I had an 80% win rate and up 1 hour on that week. So it's kind of like in line with the testing results. And what I'm doing now is I'm going to be trading this for a couple of weeks, and then I'm going to compare this with the 1 hour setup. And then that test is going to conclude which one I go with. But what I do here when it comes to planning is I have in TradingView, I have my watch list here, and you can see I got the watch list here with all the, look who's in chat. What's up, Janice? Hope you're doing all good. Hope you can come on the live stream soon again. I want to talk a little bit about NLP. We got to plan that. Anyway, so we have the watch list right here, and I have a couple of different sections. So the first section is called open trades / orders, and this is where I place all the trades where I have an open trade or where I have limit orders placed. It's also where, if I haven't done my weekly trade journal review, I keep them in here until that's done. And then I have section 1, 2, and 3, and you can right-click your TradingView watch list and click Add Section, and then just rename this to whatever. And I've divided this up into open trades 1, 2, and 3. So when I start my planning, I get all pairs on the list number 3, and I simply just go through it like this. So if I see a trade idea, or if I see something that I like, it's just something that kind of like, is price hitting a level, or is it about to hit a level? Does it have a market structure that I might want to be trading throughout the week? If yes, I'll move it to the second list, and I'll go on like this. And GBP CHF, like for me, it's quite obvious. I obviously want to sell that level, move it to 2. CAD JPY, I'm going to buy that level, move it to 2. Okay, and I do this for every pair. Here I had a plan that didn't activate. This one, GBP JPY, I don't like it, so I'm going to move it at the very bottom of the third list, and I'm not going to watch this one. But I'm going to be adding alerts at levels where I think I might be interested. So I'm just going to place an alert here, and then one above here just to remind me to look at this one. And then AUD JPY, again, very simple. I want to buy that level, move it up to the second list. And then when I've done this with the whole third list, I go through my second list. And what I do now is the ones where there's an actual setup forming right now, or in the next few hours, or maybe the next day, I'll move that to the first list. So here on Euro GBP, we have a trade setup, and we have a trade setup that might be forming right now or in the next few hours. And that's going to be a bounce at this area for a move up here. And I look at if it aligns with my trading strategy of half an hour. If I TP up here, I can have my stop loss all the way down here with half an hour. It's just insane, right? And I can even front run this level right here. Move that stop loss up a little bit for 0.53, making sure I incorporate the commissions, which should be 0.03. So that's going to be the trade, and that's a trade that I'm willing to take in the next few hours.
That.
So I move that up. So I move that up to the first list. And this is my whole structure. So when the week starts on Monday, I have the first list. And the first list is all I really care about. This is what I'm looking at most actively, the first list. And then, of course, my open trades. But honestly, the open trades, I'm not really looking at that because I have alerts. And, I'm trying to go with the set and forget approach as much as possible. If I have an open trade, it means the plan is already activated and I should have all my alerts set and they would tell me when to move stops, etc. So what you see here is a process that honestly, it's taking me a long time to create this process and to understand that this is the process that works for me. And I want you guys to create something similar, something that works for you and something that you can, do consistently every week. Because having a system like this where you go through 40 pairs and then you have just a few pairs that you look at and you wait for a setup to form, that takes out the TA out of trading because you've already done the TA. Now it's all about trading. So, you do your planning, you do technical analysis, and then you go into trading mode. And trading mode is something very different, when you go into that trading mode, it's all about executing the plan, which is something very different from technical analysis. Technical analysis is about planning and forecasting. It's almost like forecasting the weather, right? But actual trading is something different. That's when you execute, and that's two different mindsets. Do you guys agree with this?
Totally, 100%. Go ahead, Alex.
No, mate, go. You got some wise wisdom. Wise wisdom.
Alex just made a sound that makes me think that he had a stop loss getting hit.
No, mate, I'm short euro at the moment. This is looking pretty tasty, to be honest.
Dude, yeah, this is a good short. I actually wanted to bring this up. I think for me, this is on this 4 hour candle close. I mean, this is a 1 hour. When is the 4 hour candle closing? 45. Oh, it's the same. So 4 hour candle is closing at the same time as the 1 hour candle. This is good because I honestly think that if the 1 hour candle closes something like this, I could very easily take a trade just down to that level, like a small trade, just down to that level and stop loss all the way up here. So
yeah,
dude, it's so weird trading negative risk to reward, but the potential is actually crazy. I mean, because we're just asking for a small move,
Yeah, you're putting the odds in your favor.
Yeah, more obviously your win rate's probably a lot more, so you can afford, if you do lose that trade, you can lose 3 to make 1, and I've seen very profitable people like that. So
yeah, and I mean this is last week was the first week testing it, and it's profitable and not as profitable as I would like to, and I did make some mistakes, but still the win rate was 80%. And I mean 80%, I took 7 trades, so it's not like I took 3 trades, but 7 trades, 80% win rate. It tells me that there's some serious edge here in the negative risk to reward. However, I did actually compare it with 1 hour, and the 1 hour strategy last week would have been like half an hour more profitable. So for me, it's like I got to choose: do I want a high win rate, or do I want a lower win rate but more profits? And honestly, I think I want a higher win rate but less profit, because I can then adjust
confidence.
Exactly, good for my confidence, because I've actually realized that I thought I was a good loser but I'm actually not. Like, I thought I could work very well with like a 34% win rate, but it's really stressful. It's
not
it's
easy. It's not
affect
easy.
yeah, it's affecting me quite negatively with the drawdown periods, and I'm like, yeah, I would probably like to sacrifice profits for higher win rate because I can adjust the risk.
Yeah, it's not easy at all. I think uh, I have to face that constantly with my win rate, which is lower than 50% almost all of the time. I rarely have like a week where it's above 50. It happens once in a while, but usually it's not. If I can get 45, I'm very happy. Usually it's a little bit lower than that. And the other, you have to have a way, an anchoring to, you know h- keep your confidence while losing more often than not. You got to have an anchoring, something you focus, because you can be focusing on the win rate. Because if you focus on the win rate and you realize you're losing more often than not, then it's not going to feel good. It's not going to feel right. But what I use as my anchoring is, try to measure, not try, I measure the the expectancy, and I focus on that. And I know that based on the win rate, that I can measure my expectancy. If my week only had like 6 trades, I need more numbers. So I by doing that, I know I can be looking at only a number of a data set of only 6. That doesn't make sense. I need to have at least 10, 15, so that I can look back and say, okay, I have a positive expectancy. That win rate is just part of the game, and let's keep on executing the way I should be doing, which is according to the plan. But coming back to what you were saying before, we were gonna say something about the.
Sorry, I'm just gonna get some coffee. I'll be back in just a minute.
All right, go ahead. Let's see. Alex,
saying something.
yeah, we were, when I was going to say wise wisdom. What was it we were
Why is
talking about?
why? Can't remember now. I can't remember. But it's interesting. I think what Jonathan's just said, something that is really interesting, is
Oh yeah, I
he's
remember
not
now.
he's not a good loser, and
Mhm.
that can actually creep up on you when you least expect it as well. Suddenly you could be quite good at taking losses and being disciplined, and sometimes that little bit of not being able to lose and always trying to be right can creep up. So it's quite interesting that he understood that and made that change. Okay, so we've got an extra little bit added into this trade with the same take profit and same. So we got 1%. So we're actually 1-for-1. This is actually, let's have a look. No, it's not. There we go.
I'm looking at the
More
same
like
trade, but I had 2 losses
already.
already, which is okay.
Yeah.
That's nothing. But I'm still looking at another transition, but I haven't pulled the trigger yet on EU. Not
Yeah.
the
So
second time
I was,
around.
all I'm looking is for the rejection off that 200 EMA. Just
Mhm.
taking these highs out. Just taking these highs out. I'm just looking for that retracement. This is a really nice move up. 50 fib, and the 618 is all the way down here. So we can, wouldn't surprise me to see some action all around this level. So obviously we've had that initial rejection. Now we're having, on the 1 minute, obviously now we're having a nice push up. The only thing that I would say about this is my stops are on this high. New York is 5 minutes from being open. If we get a run on these highs and then a push down, that sucks for me, because my stops are
That's gonna
literally
take
on
you
that
out. Yeah,
high,
yeah.
and it's going to take me out and then maybe move.
Mm.
So we'll see what happens. The only thing that I would say is it has broken, these lows here. So let's see what happens. This is a nice little ad. We'll see if it breaks. If it breaks and then it starts to move again, I'll think about getting back in, but we'll see what
Yeah.
happens.
Yeah, I'm interested in we are at the top of an H4 supply zone, so I'm interested in spotting that transition from bullish. We've been bullish all morning.
Wow,
So
crazy
from
morning.
yeah, from bullish, that transition, I would expect some kind of retracement going forward. So I'm keen on spotting that transition. And if we don't, we have an area of till, let's see, let me show my screen, which I haven't yet.
Yep, pop it up.
Yep.
I mean,
it's coming up.
EU is bullish across the board here. So today is very bullish for the euro.
It is, but I mean, it's been so bearish, so it's not surprisingly that it's not a surprise that it's so bullish right now. I mean, and it hasn't changed the market structure at all. Even with all this bullishness, it's still just a retracement to me. What I was going to say was, we have on the H4, we left some structures below, which is great for TP if we're going short. We have this a cluster of bearish order blocks on H2. H1 was already invalidated, but the H4 and H2 are still standing. And this is we do have a bearish formation, which is this is as the quasi, right? It is in a bearish market structure on the higher time frame, so I like that. And I'm looking at these two areas, the H4 for a possible continuation to the downside, either this one or above that. Now, I already had some signals here on the first one, but it seems I'm not too sure if it's going to hold or not. But what I'm looking for is this: we have a very nice, very tight area on between 739 and 752. That's only about 13 pips, where I expect, if it hasn't turned transition into bearish before that, that perhaps this might be the place where the bulls will be consolidating and perhaps moving maybe that continuation maybe into that range again, because who knows what will happen, but we're probably going to have some kind of range before we presumably continue, right? We don't know yet. I mean, if it breaks these highs, then perhaps we're going to see a much higher retracement. But so far, I'm going with this bearish daily order block that probably will tell us it's not going to go much higher. Also, if you look at the ATR, we are currently only six pips from the daily ATR. So I don't expect, and this order block, right? Let me open this up a little bit. This is actually a good setup, because if you look 6, that's within that order block. So that the ATR also agrees that price likely today are not going to go much higher, and we don't have any news coming in. So the question is, where is it going to turn back bearish? Is it going to be using this structure, or perhaps something a bit higher, which I will be taking both of them. As long as it signals, I will be taking the other one as well. And my target will not be for the continuation yet, just to trade the range, because we need more information before it has gone down a lot. So it may only in the coming session, maybe only needing to be range bound for some time before it continues. Who knows how far.
Volume in the candles is getting shorter as well. So you see the push down, we see the volume in the candles pushing down, and then the volume on the last push down was a lot less. If you actually take the measurement tool and you see how big the candle was for that candle compared to the last push down, so that candle, what was the pip size
70.
on that? 70. And what was the last big push down?
That's 90.
So 90,
the last
70,
one, this one.
the last one, I bet you that's around 40.
Yeah. This is 41, yes.
So around about 40. So
yeah,
we're getting slower. We're also coming into those areas, the end of a demand area. So it's not surprised why we're turning here. I wouldn't be surprised if we go down there, but I wouldn't be surprised if we start pushing off pushing up further before we get on there. I'm not taking this trade very far.
Overnight.
I'm not taking it overnight.
Yeah, yeah.
I'm taking it for 10 pips and that's it, and I'm getting out.
Oh, okay.
I would have
Yeah,
traded the move up to this area, but you know, Victor, when I said to you earlier that I was trying to figure out a new strategy that was more like on a swing, when the office gets busy, when you are busy, it is awful to have open trades on, I swear, because you can't, for me, I can't just open a trade and then just leave it for some reason. I have to be in front of it, and so we'll see. I'm trying to see, but we'll see what happens with this trade, because it did like a nice Quasimodo on the 1 minute.
I think you kind of have to get used to it. I think you know, you had to get used to it. You know, having trades open. I think taking few, you know, smaller position sizes, because you know, if you can get used to having many positions open, then obviously with, you know, being busy around the office, it really does help being able to just, you know, look at levels in the morning, and then you just enter trades based on that, and then you just let it go, you know. But I definitely understand that feeling of, you know, having to manage and having to look at the P&L. But I think it takes getting used to. I just entered the long on Euro NCD. I can show you guys here. So this is a swing trade. For me, I like so I can show you first the pattern that I'm looking at. So I like when you have a downtrend that goes like this. Yeah, obviously this is what downtrend looks like.
I like that kind of downtrend as well.
So and then you have like you hit a major level right here. So let's say you have a high time frame level right here, and then price is bouncing, and then you have the double bottom. So this would be a traditional double bottom, a traditional W. But what I like is when you have the right leg hitting, could be hitting the 50% fib or the reload zone, and it looks like this. This tells me that it's not only is there a double bottom and a W, but there's actually it's more bullish because the right leg is higher. I mean, if you get something like this, then this could just be a continuation of the downtrend. But when you're actually forming a higher low, I feel like it's a higher probability of seeing that continuation. So if we go to Euro NCD, so this is on the daily, you see that price has had a very good looking downtrend right here with higher highs and higher lows, hit a major high time frame level, a weekly level right here. And then if you add the fib, and this is where you see the W, right here, and the right leg being a higher low. Not only that, but if you add the fib, you'll see that it's probably inside the reload zone here. Yeah, so it goes a little bit below, but it's still the same idea. So you have that downtrend, lower highs and lower lows, forms somewhat of a double bottom at a major level. So we can go to the weekly. We can see that this is a major level. This is on the weekly. So what I'm doing here is, again, I'm just looking for a small move. When you look at market structure, it's not really a small move. I think it's 85 pips or something like that. But according to market structure and the daily structure, this is not really a big move. It's a rather small breakout up to that level on the daily. So again, stop loss all the way down here. So we can basically just move around here for a while before getting that breakout. And if I see that price wants to continue this downtrend like this, I can close this trade for half an hour loss. That's the trade I'm in currently. And you can see how price is reacting to this level in the past, very violent reactions. Sure, it's been tested quite a lot of times. So obviously this retest is not the best test, but you can see that the market structure that we're getting at right now, the bounce, is similar to each time this level has been tested in the past. Now, if I would be swing trading this with the way I was trading before, I would have my TP, all the way up here. Okay. So you would look at that and say, well, that it makes sense. If this is the major bottom and you're going to get it move up, it makes sense to hit this level. But we need to go through so many resistance level before that. Now that I'm just asking for a small move here, we can even come up, test that level, and then continue the downtrend again. So that's the whole idea with that one.
Yeah, I think when you have your TP all the way to the other end of the range, you're actually asking, that the whole not the whole structure, but big part of the structure actually changes to be able to reach that other side of the range. But if you just expect less, and that's what you're doing with your 1 to 2 TP that you're trying out now, you don't need that complete change in market structure or even on the lower time frames, because on the lower time frame, for it to reach those TP, it has to change completely, and that's less likely to happen unless you have more indication that it is happening. And that's something that I've seen a lot, that the market doesn't transition usually. Sometimes it does with a V-shaped correction or recovery, but V-shaped corrections are not very frequent. Usually it goes from going back, breaking those bearish structures it left behind, but continues to go maybe a little bit lower. Maybe it's going to do equal lows before it actually goes up. But what you're doing, you're already getting your TPs on its first move. As it is getting less bearish, right, as it is transitioning to become bullish again, it doesn't go on a snap. It starts, maybe have a spike and then come back, maybe a higher spike and then come back. But each time it does that, you're getting in and you're getting profit out of the market. I like that, and I also, my strategy also accommodates for that. So I also have my TPs are based on that, the fact that I don't need to be completely right for my TPs to get hit. Just market just reacting is enough.
Yeah, and one thing I've noticed now is, when I've been testing this, and I'm sorry if there's weird sound, it's me lowering my desk. So if there's something I've noticed now that I've tested this, and it's just winner after winner. It's just the win rate is just very nice. I know it's just 6 trades, but I've also back tested quite a lot, and I've seen in back testing. So with my experiment and then back testing and then with the live trading, I've seen that this is obviously giving me a much higher win rate, which is logical with the lower risk to reward. It's also making me take way more trades than I'm supposed to be taking, which is like higher win rate increases the confidence, and confidence going up, likely you'll take more trades because you think that the next trade is going to be a winner. And that's something that I'm really struggling with. I know that if I continue like this, this system is not going to be more profitable than the last one. I know for a fact that is a huge problem, because 6 trades in a week, I'm not supposed to be taking 6 trades in a week. That's not that's
should probably like one or 2, huh?
Yeah, like max 5, But if I can take 2, 3, that's great,
The thing is,
so
there's something that you need to check, because by lowering the TP, your frequency shouldn't go up, because your entry logic hasn't changed. It's
exactly.
just the TP. It's just the TP that has become closer, and you will be less. The duration of the trade will be shorter, and your win rate will go up. But you shouldn't be taking more signals, because there aren't more. You didn't change the signals. The signals should be the same. So there's something that has changed with with the change of the TP placement as well.
Yeah, and I think it's pretty obvious what has changed. Higher win rate is it's been a long time since I had an 80% win rate week. I'm usually at like 40 or 50. Good weeks are like 60. But it's been a while since I had 80% win rate. So I'm watching that. I'm like, this is great. Let's just keep on trading. Let's just take more trades. Let's just keep going. So it's the same. You know, you're on a winning streak, and you know, you're on a winning streak, and you get confident, and then that confidence,
Humbles you.
yeah, it will. I mean, I
will
can
at some
feel it.
point,
You
yeah.
know, I can really feel it. So what I'm gonna do now today is I have 3 positions open, which is like I rarely have 3 positions open at the same time. So what I'm gonna do now is like I'm not gonna take any more trades today, unless it's like, okay, this is a perfect setup, you
Green
know,
light.
because
Yeah.
yeah, exactly. When you get a perfect setup, it's like, yeah, I have to take this. But last week I took 2 trades. I mean, I took 2 trades that I shouldn't have taken. I guess which ones were losers? Well, only those 2. So without those 2, I would have had a 100% win rate. But I took 2 trades. One on EU, like right before a major news event. Like it's stupid, right? And I got stopped out.
Mm.
And
What part of you do you feel? What kind of emotion do you feel contributed to you taking that trade? Was it greed? Do you feel like, was it, you know, a FOMO? Like, what did you feel? What did you feel in that
I think
Did
particular
you
trade?
feel did you feel
I
you're missing out opportunities because you're away?
no, like honestly, on vacation, I've had more time to trade than being in the office.
Oh, but your girlfriend loves you.
Oh yeah,
What fun to be on holiday with.
While I point to the screen, I said, "This is what paid for this." No, no, but honestly, like I think it's a mix between it's a mix between it's a mix between FOMO and overconfidence, because I look at the results, and I'm like, if I'm not taking a trade, if I'm not in a position, I'm missing out on this win rate. You know, I'm like, I get an 80% win rate. I get to trade more. You know, I get to trade more. I get to make sure that I have that the statistics working in my favor. So it's kind of like I'm happy that it's successful, you know, because not a lot of times when you go from back testing and experimenting, not often it's successful right away, like in live trading.
Mhm.
From my experience, that's gonna be a lot of problems. But this time around, it's just all right. Everything has worked very well. It's like it just worked very well, right? So I think a combination of FOMO and but it's positive emotions. You know what I'm saying? Like it's not negative emotions. It's basically like maybe I'm it's just happiness. You know, it's just positive emotions, which is I've said this before. For me, my danger, like my problem with my mental, you know, side of trading is having positive emotions. Like my negative emotions, I know how to handle, but positive emotions usually lead to more problem.
Hmm.
Mm.
What I've got an issue. I wonder what you guys can you can maybe you've had it that you've got rid of it, but it's actually greed, which has started creeping up recently, which I didn't. I've had it before, and I've taken it out of my trading somehow, but then it's started to creep in actually recently. I found it. There was a trade last week on Friday that I took, and it already hit the area where I was going to take profits, but I actually pushed the take profit up just a little bit more because price came to that level quite fast, and I tried to squeeze more out of it. Soon as I squeezed more out of it, even though I saw the 1 minute doing what it's doing now, you know, you see these highs, they're getting lower, and then, you know, you can see it just tiring out, and it was doing that in front of me. And I was like, nah, it's okay. Nah, I'm just totally ignoring what price action was actually telling me out of greed. And it ended up coming back all the way. And I was up around about 2% on this particular account. And it just ended up giving that 2% unrealized profit all the way back and then into a loss. And I just sat back and I was just like, wow, like, bro, you actually saw it was going to retrace. It hit your TP but you didn't close it and you still tried to push it for more. And I was
Yeah.
just it was an interesting feeling. So that's what I've got to kind of deal with and make sure that doesn't creep in. But I don't know if you've ever had that. Have you ever got over that?
I think, I never had huge issue with greed because I've been very focused on putting my orders in the market and then just letting them work. So if I have I think I started with that, even from the very beginning when I traded, I always put a TP order in, and I think the greed for me is realizing that my TP is too high, but I'm not moving it. Like if you realize that you put a too high TP and then you see price reversing right before that TP, like the logical thing to do is to take the exit, right? But what I do is like, nah, I'm gonna stay in. That TP is gonna hit. I know that TP is gonna hit, and then the stop loss gets hit, right? I think that's the same thing, But with greed, I think honestly for me, it's just shut it down. Shut
Yeah,
the screen down.
I think
Well,
the issue when you see P&L and it's a nice P&L, suddenly then it's like, wow, what could I do with that? Well, that's paying off. That's paying for my next holiday that I'm taking in a couple of weeks. That's done. That's my
Yeah.
holiday closed. You just look at it as like, that's right now is going to pay for something. And I think that's maybe a little bit of that creeps in, which is super. I've been trading for a long time now. What's a long time? 5 years, quite a while. It's not a short amount of time. And I've got past those little times, but it's funny how if you're not constantly working on these things, not constantly trying to protect yourself against these kind of emotional biases, they can always creep in, I feel. So when you let down the gates, that Trojan horse start, of Troy film. But yeah, it's one of those
no,
things.
for sure. I think, well, in terms of greed, I've had it many times, and it's a balancing act. I cannot be too fearful, either on the other side of the spectrum. I need, but I can be too confident, right? Because and that's where the importance to me is to have, uh, you know, a mechanical system which I base. If I have entries that are discretionary, they are still based on the mechanical system, and the mechanical system has no room for error. Like, this is the FTA. To me, that's the way I deal with it. My TP is based on the FTA, and the FTA is it's not a maybe, it's a yes or no question. Where is I have a question, and the answer is clear. There's no room for interpretation or different opinions about it. And by doing that, it doesn't, where I put my TP doesn't rely on me anymore. It relies on the trade plan. And that's why I take myself out, because I know I'm not able always to be, keeping my greed in check. Sometimes we're all humans, right? You want to get that profit out, or you need that money because you have that project or thing you want to buy or do. And but those external factors have nothing to do with your edge. So when we let them have a saying in our trading decisions, the edge starts going away, because the edge wasn't never based on us needing this, or P&L looking a certain way. And the other thing I do with P&L is that I do look at my P&L, and it is in dollar terms, but I only look, and that's a little mind hack, I only look at the master account, on which the dollar amounts of the R value never changes. So 1R on my master account is always the same dollar amount. So even though I'm looking at the dollar amount at the back end, I'm not looking constantly and deliberately, not looking at all the other slaves that I have linked to it. So the actual money is
Mhm.
is filtered out. It's always the same. It's standardized. It's normalized into a specific number that I get accustomed to, and it's always going to be the same. So even if I'm managing much more triple in the future, it's still, I'm only
Mm.
going to be looking and reacting emotionally to the same dollar amount. That's one thing that that helped me handling the greed or the fear of having open P&L, looking at open P&L. And actually, because the 1R is a fixed dollar amount, I'm not actually looking at the dollar amount. I'm looking at the R, because it's a fixed number. I can see, okay, this is 1R, this is 3R, this is 5R, and it's much easier to me. So that's a little mind hack I use. But yeah, that's what I can say. It's using uh relying less on me taking decisions based for that TP placement, and relying more on having a strict rule where the TP should be, and that's it, and not
Mhm.
have it depend on me.
Mhm. Yep.
What are you guys thinking about Euro GBP here?
Let's have a look.
Euro pound. I think I mean, I really like this,
Mhm.
I kind of like this area here and how we've reclaimed this level. And I think it makes sense to see a move up here. And the 1 hour is closing in 8 minutes. It hit that level nicely with a wick. 15 minutes is quite strong if it closes like this in 7 minutes. I kind of like how it reclaimed this level. I don't know. What do you guys think?
It looks good.
Let's see.
Looks good.
Yeah, there isn't a lot in terms to stop price, and price has only moved about 40 pips out of 67 on the ATR. Which side it is going to be, the expansion is we don't know, but it can well be on the upside, and there's nothing stopping it. We are currently in a H4 order block. So, but if it breaks and we're right at the middle, let me look at the, let me place my my chart on GU. If you look on the daily, we don't have anything, right? We broke this order block, so this one is no longer valid according to my personal rules. So the other two is the place where the wick was is to me significant, because it is the monthly order block that it hasn't touched, but it came very, very clear. Actually, it did touch. I'm sorry, stand corrected. It did touch the monthly order block. I know it doesn't mean it's gonna switch all the way, but this is typical of price reacting to an order block the first time around it comes, even if it's a huge area where it hasn't, formed any structures yet, shifting from bearish to bullish. This kind of reaction is very, very typical. It gets to a macro level, macro structure, and it has some kind of reaction that can enough to be, catch a good trade. But if you look at the daily, we don't have anything stopping us. It going up, and actually on the 4 hour, we are currently in an H4. So this is the only thing that could stop price and for it to continue. But if that is not the case, we still have about 30 pips, 20 pips to be exact, 25 pips from here, from the top of the day, where it can go, and that's gonna be roughly around here, right? It's Monday. There's no big news coming up, if I'm not mistaken. So this could well be the range, the rest of the day, and
Mm.
that fits well with what you're thinking, what you're seeing. If you look to the lower time frames, okay, there are some order blocks here which I haven't marked, but on the H4, the road is clear as long as it can close above this, which on the H4 that would be in the next 5 minutes. I don't see that happening. We'll have to wait. We'll have to wait for that. It's
Yeah,
quite strong. If it can continue, I can see it ending up the day having a high all the way here. Um,
I'm entering orders
90% of its
for
ATR.
so I'm entering orders for
E-
AUD,
yeah.
ADUSD. Yes, yeah.
Looks like it's gonna pinch me out at the moment. It's right on its EMA. It's right on its 200 EMA level. On that line is right at the 200 EMA. So we've had on the 1 hour. So you've had that push up of the 200 EMA, the rejection, and now it's retraced, hit that 200 EMA, and we're gonna see what it is done. My stop is literally like what 2.5 pips away. So let's see what happens.
On GU or EU?
No, this is EU.
Okay.
Yeah, GU 2 pips is just never happened. Just go through that like butter.
Okay, I told you guys I'm not gonna take any more trades, but I did anyway, and so I'm long ADUSD. I'll break it down for you guys, and I'm probably gonna enter €1. We talked about Euro GBP as well. I'm looking at this one, so we'll wait for the 50-minute candle to close. If it closes like this, I'm gonna be entering this one. I got way too many positions open. I'm getting a little bit nervous.
What is going on? You were literally talking about how you were, yeah.
Yeah, but there's just
Very
so many good
entertaining.
setups. There's so many good setups, and I have a wide stop loss. I'll be able
Wasn't it
to.
Dante that said the market is always advertising?
Yeah,
It's advertising for your liquidity, baby. He wants your money.
yeah.
Buy me.
Anyway, so ADUSD. I'm just gonna do the calculations on Euro GBP first. So yeah, that's probably gonna be. You know what? Let's wait.
Hit of a stop loss right now.
Yeah, let's wait for that 15-minute. I'm actually, well, overall, surprisingly, I'm in profit, which is good. I'm not gonna enter this one. Okay, I'm not gonna enter that one. ADUSD. Okay, let's talk about this one. So first, we'll look at the daily. So what's going on here on the daily? It's a very messy chart here. I'll remove the alerts as well. But what do we see here? This is on the daily. What we see here is a range. Very not super clear, but we have a range. Okay. So adding the tools back, you'll see that we got the dotted lines is range highs and range lows. And you can kind of see how it becomes clearer. So the middle of the range EQ is that one right there. So what we have is first we have a move up, then price comes down, hits the 50% fib, nice wick. Go down to the 4 hour. We have a 4 hour bullish engulfing candle. So hit the 50, 4 hour bullish engulfing candle, reclaims the range EQ. Go down to the 1 hour. A nice structure here where you have the downtrend, breakout, retest this level right here. We go into the 15-minute again, and the 1 hour candle is going to close in 1 minute. It's a nice reclaim of that level, nice wick. Also add the fib from that low to that high, and you'll see that it hit the 0.618. Then we go into the 15-minute, and you see that this kind of confirms it, right? The close of that 15-minute candle tells me that we reclaimed the level, and I'm just looking for a move up here. So that TP is based on the 1 hour. In the 1 hour, it's these candle closes right here. So I'm just looking for a small move up here. I got my stop loss all the way down here. I'm just looking for half an hour on this trade. Very simple. Looking at all time frames to make sure that the level that I'm trading here, even as low as on the 15-minute, is a level, the level on daily as well. Now looking at Euro GBP that I was interested in. Now, obviously, this kind of feels like it's running away from us. I feel like I would have wanted to get in before that push. I think, it's probably going to push higher. It's probably going to come up to test these highs, but I feel like I'm late, we have sort of a gap here.
Oh, okay, just got stopped out.
On what?
EU,
EU.
me too.
Yeah, I wanted to short EU, but I'll show you what I was looking at. So this was the trade I was looking at on EU, and we never really broke down. We never broke these lows. What I was looking for was this. But we had a pretty good reclaim of that level and a good push to the upside. Let's see. I'm long euro. What else? What am I trade at? Okay, I'm long 80 USD. I am long 80 CAD, and I'm long Euro NCD here based on the higher time frames, and I'm also long NCD CHF. This one right here. Again, same structure here, same idea. You can look at the weekly. This is a break and retest based on a weekly level. It's a weekly pin bar right here. Going to the daily, we have a daily bullish engulfing inside the reload zone. Also very nice break and retest. 4 hour, get a very nice push it upside here on the 4 hour, reclaiming that level. So yeah, I'm just hoping that we're going to get a small push it upside. But honestly, looking at the weekly, I mean, we're most definitely in for some type of move to the upside right here. And I'm just looking for a move up to the 50% fib. So I think it feels good now because I'm in profit. But if this turns around, it's not going to feel very good. Sometimes you have a losing trade and you're like, it is what it is. I followed the plan. At least I followed the plan, right? And it's a losing trade, and you say like, well, it's still a good trade because I followed the plan. If I lose money on these trades, if I lose money on average on all of these trades, I'm probably going to say tomorrow, yeah, I was over trading. I know I'm over trading. So if I win on these trades, it's still going to be it's still not going to be perfect trades. However, technically, I've just showed you the setups, and I can see like there's nothing wrong with the AUD CAD trade. This one right here. I mean AUD USD. There's nothing. I like this because if you use the replay function and you look at it from this perspective, you have a daily break and retest of the reload zone. You have that 4 hour bullish engulfing candle, and from this perspective, it looks like a good trade. So at the time of entry, it looks like a good trade. The only one that I'm not happy with is Euro NCD because it feels like I entered this one a little bit too early. It's probably going to see a pullback. I think you have to differentiate between. I mean, yeah, I'm not going to try to justify over trading. Honestly, I'm still over trading. However I look at it, whatever I try to say.
But
Yeah.
it can only be one of the two, right? Is it if the trade is good, then it's not over trading, right?
Yeah, but
Are you taking more entries on the same setup? Because then that would be over trading again. But
what
if you're only taking one trade on a setup that fits and checks all the boxes, then that is the plan. It's not
yeah,
over
but what
trading.
if I feel like what if I tell myself I'm not going to take a new if I feel stressed and I tell myself I'm not going to be trading today and I take 4
Yeah,
trades, that's over trading,
Okay, yeah.
Because I feel like it's important to kind of follow your are you in the flow or not? And if you're not in the flow and you're not supposed to be trading when you're not in the flow and you're trading anyway, you're over trading.
Agreed.
Yeah, 100%. I agree with that too. If it's not only about the plan, but also about the directions or the awareness rules you put in place. If you observe that you're not doing it correctly, and you should stick to them. That is part of the plan as well. Not only identifying the setups that fit the bill. So I understand that completely. I was gonna say something, and it is with the H4 order block. That's if you guys allow me, I'll put my screen on. The H4 order block has been, we had it here, right? This is at the beginning of the stream. I mentioned this, that there is a supply zone, and we just 6 minutes ago we closed above it, invalidating it. And so what is the next structure if price is going to transition back? What is the next structure it is likely to find selling pressure? I believe it is this H4. That is the next area or structure that could possibly turn price around. Looking at the big bars, maybe it will not. Maybe it will continue, right? But given the ATR, and someone asked in the chat, how do I use the ATR? You can find on MT5 on the indicators ATR, uh, um, and you can also find it on TradingView. It's I think it's widely used, and the way I use it is the everyday price has a range, right, from the highest point to the lowest point, and that's expressed in number of pips. In, for example, EU currently the ATR is at around 61. Now, the ATR has, depending on how many bars do you go back in time to measure the average, because that's what it is, average true range, which is it takes the average of the last couple of bars, and that number of bars in the past is something you decided. You can have it at 10, at 15, at 20. Of course, the lower value you have, the more sensitive it will be for recent price action, and the bigger the value is. If you put it at 30 or even longer, it'll be, something that is not as sensitive to recent past, which is nice to know. If, for example, you had a spike, we had a, if you're the day after of spike or a few days after the spike, it's sometimes the ATR will give you a reading that is not typical long term. So it's good to have more than one setting, so that you can get and assess, okay, this is average because of the last couple of days, or because this is longer term average for this pair. And what the ATR does, or what the information it gives you, is the average range you can expect of a pair on any given day. It's an average. It's not going to do it exactly every day. And of course, that range is dependent on the volatility of that day. If it's a high impact news coming up, it has a chance of going a bit more than 100%. 100% being 100% of the ATR value, of course. For example, euro is currently at 61, right? It should be reach that today, more or less. And because we don't have any red folder news, it may hit 61, it may be 50 something. Currently, it's already at 58. So it's basically already 90. What is that? 3 pips from, that's 5%, that's 95%. So it's already almost hitting that 100%. And the trick is to identify which days it is likely to go way over and which days it's not going to exceed that 100% by a lot. Today there's no big news coming up, right? So maybe it doesn't have that catalyst to push price a lot more than 100%, maybe 105, maybe 110, but it's not going to do 150 today, right? So if you know that, you already know the range, for example. And how do I use it? Let's see, this is the daily candle, right? So if you have the ATR telling you that it has 61, that's the range, the average range for today, you take that from the low of the day and you measure at the beginning of the day. You should do it, especially, and you measure where is 61. 61 will give you a level. Okay, so this is 100%. If it is going to expand only to the upside going forward, so that's going to be 745. You mark that down, right? Doesn't have to be all too precise, because ATR is an average, and you do the same for the downside, right? So you measure from the top, 61 pips, and what it gives you. In this case, we already almost reached the ATR. So that's 678. Let's mark that down. 78, right? So that is the range based on the ATR. Now, if you know this and you see price, and you're, let's say right now it's already very obvious that it's going to be hitting or trying to hit the one on the top side. But at the beginning of the day, you don't have that information yet. Let's say the market started at the beginning of London, let's say here, and you see that market is very bullish. It's the impulse is to the upside. That should give you an idea of which side is more likely to go. You still don't know because price can still change completely and go and have a continuation to the downside. But when you have this, you already have the range to expect for the rest of the day, right? Because if it is going to hit this by sometime before the end of the day, that could be your target. If so, you already have the distance, and you only need to have, okay, which direction is it going to expand to? Is it going to expand to the upside or to the downside? Of course, these lines, they at the beginning of the day, they are not at the same place as prices progressing and expanding the current range, right? So you have to, they're not fixed. You have to reassess as the market is moving out of its initial range of the morning. But this can give you an idea. Okay, so if this is going to, let's say, if you're expecting, and this is the way I use it. I use it for my TP to let me know what is realistically to be expected of today's price action, since I want to be closing my trade by the end of the day. I don't want to be holding it, overnight, especially, if you see at the market structure that today has been it looks very bullish, but market structure is, we were making, it hasn't changed yet. We did take out this high, but I mean, it's not very convincing yet that this is going to change all the way and keep on going for many, many days. We don't know that yet. So I'm going to be cautious. And in any case, I want to be out for the end, before the end of the day. So I need to have a TP that is likely to be hit, today. And that's where the ATR, the importance of the value comes in. You will have actually a level, right, where it's 100% the ATR. So it's the average day. If you don't take any news into account, it should be reaching this area. Of course, with experience, you will have a feeling, okay, today an average day? That's the next question you're going to be asking yourself. Is it likely to go way over it, or maybe not reaching it, right? If it's a slow day, bank holiday, maybe it's not going to reach that 100%. Maybe it's going to reach 80%, 75%, 85%, right? So there's that discretion in there, but it's based on data and based on your expectation of how volatile today will be. What's the range going to be today? And when you have that information and you have that level, you combine that with the rest of your TA. If you're using, for example, EMAs, you combine that your TP by putting it, before that EMA that is very close to that level that is given by the ATR. In my case, I don't use EMAs. What I use are order blocks. So what I will do is, okay, this ATR tells me that it is likely that this order block will have an effect, and it is likely that it will be the top of the day. Will it eventually be the top? I don't know. Maybe it will not. Maybe it will continue. But it gives you confluences, or many things, more than one thing is telling you that this is likely to be a place where price will temporarily, if anything, uh, reverse, and that's where I want to be. I want to be identifying and catching those reversals in the market. So that's how I use ATR. And if I do that, it gives me, as I said, it's pointing in the direction that this order block is the next area that price could be pushing to, and then we might see some kind of reaction. That's the idea, the scenario that I'm thinking is likely. And depending on how this price action is forming, I may try to trigger this order block, or just at the end of the day close it where I think it is likely, to consolidate, because I don't want to be taking it overnight. So that's how I use ATR. And we now just had a on the H4 we just had an area where let's see, this one, actually both of them, actually this one is the one. This is the H4 that was just invalidated a couple of minutes ago, 15 minutes ago. So this is clear to me. It's breaking bearish structure, so it needs something above us. There's no need for me to keep trying to short this. I have to wait for it to get to this area, interact with this order block, and then see if it has, on the lower time frames, signs of a reversal, signs of topping out, and that's going to be my sign to get in. But that's using order blocks, combining it with ATR.
Right. I wanna show you guys something. Where's the AD CAD?
How's the greed emotion now? Not really present, to be honest, mate. Not really present. Just
So first of all, I want to
trading normally.
I saw that I made a mistake here on, what am I on? AD CAD? Is this AD CAD? Yeah, so my TP for AD CAD is wrong. I'm not sure why, but it's supposed to be on that high right there. So I gotta move that down. It's supposed to be right here on AUD CAD. And so I wanted to show you something else here. This is why, and I'm gonna try to do this on MetaTrader, because I know a lot of you watching actually wants to see the actual trades live here on MetaTrader. So I'll see if I can do it live here. So you see my stop loss is down here, right? And TP here. So my entry is around this area right here. So it's a 0.5 R. Now, the reason why I like to have my stop loss wide, and this is probably the same stop loss I would have even if I would look for a 2R or 3R or whatever, is because we had that entry. Now you see price went all the way down here. Now, if I would be looking for that TP with a 2 or 3R, I would probably have my stop loss here and I would have been stopped out. But I want to give the market, or give the trade setup, enough room for error to allow it to become a winner without stopping me out before. So you see that you have that move down, and now it's starting to kind of like confirm the setup and move towards my TP. So this is a good example of why I want to have a wide stop loss. If you go to AUD USD, I'll show you where something similar. This is an example of the other way around, where I have a very wide stop loss. Stop loss is all the way down here, but price never made its way down. I had my entry. Where's my entry? My entry is right here. So here's my entry. And now the setup is confirmed, right? I have my entry and then price is starting to move higher. At this point, I can start managing the trade with the stop loss. And the same thing goes for the AUD CAD setup, where you already had the move down, you almost hit that stop loss, and then you started reversing. And now with AUD CAD, I can limit the loss of this trade. So if I move my TP up to this area, I'll limit the loss of this trade. And if for some reason I'll have a spike down, I don't want to be in this trade, and I'll be losing half an R instead of 1 R. Because if like this is the confirmation of the trade, that pin bar-ish candle or whatever you want to call it. If price moves down here, now this is a local downtrend, and I don't want to be in this trade because the whole trade was based on a break and retest of this level, and then it kind of confirmed that setup. So I can now manage, that lower the risk of that trade. So I think that's just a good example of showing live how when the trade setup is confirmed, I can manage the trade. See if I have. It's the same with NCD CHF. Go to that one. I've already moved my stop loss up because the level that I entered was this. I entered here, right? And this price action here. So my original stop loss was all the way down here. So that was my original stop loss. Now I've moved my stop loss up because this price action has confirmed that there is a level here. I entered around this level right here, and price action has now confirmed that there is a level here. And if we come below this level, I don't want to be in the trade. So there's no reason for me to have the stop loss down here. But having a very wide stop loss allows me to, take my time to manage the trade. And doing it this way means that a lot of my losers will actually be half an hour and not 1 hour, which helps a lot when you have, this negative risk to reward. Because now, if the stop loss gets hit, I'm basically risking, half an hour to win half an hour. So you could say that it's actually at this point a 1 hour trade, if that makes sense. And guys, one thing I wanted to mention as well is this week I'm going to start recording some more videos for the YouTube channel. We've been focusing on another product, but now I have more time freed up to record videos for the YouTube. So if there's anything you guys want me to talk about, or a concept that you guys want me to break down in a video, just let me know here in the live streams, and I will gladly record a video for you guys and break it down. Yeah, and it's interesting. We have a comment right here, and that's the whole idea. Having a horrible risk to reward like this one does require you to have a high win rate, and by testing this, the win rate should be around 72%. Last week I had 80%, and I'm hoping that I'll continue to have above 70% win rate doing this. But my main goal is to take trades that have 1-to-1 risk to reward ratio. The only reason I'm doing half an hour now is because I need like 20 trades before I can make a decision on which system is actually best. So this is just live forward testing, basically, of a system, and yeah, it's actually surprisingly profitable to have a negative risk to reward. And I think I remember talking to Alex, like he interviewed a trader, a funded trader of ours, that went from being like break even, and then he started using a negative risk to reward, and he became profitable. And Gil, the founder of the 5ers, I've seen, has also talked about a negative risk to reward. So I feel like a negative risk to reward, and also, I mean, Saul is also trading. When he's scalping, I do see that a lot of times he looks for negative risk to reward as well. And I feel like this is like something we don't talk about it in on social media when it comes to trading, but it's actually surprisingly profitable if done right.
Yes.
guys-
The thing is, we have to let the statistics, the data, tell us where the sweet spot is for our specific trade setup, right? Because in May, we've heard that so many times that you have to have a 1-to-2, that is one risk 1 to get 2 or more for you to be profitable. That is not true. It may sound logical because you're gaining more, you're risking less than you're expecting to gain, but I don't agree with that, because the numbers should tell you. And for some strategies, negative risk reward is the way to go, right? But it depends on the strategy. And in your case, you're finding out, or you're measuring that it may be where you should be going. And that's how we should be. We should follow the data. We should follow the measurements we're making from our trade. So yeah, there's no fixed risk reward profile for everyone. It's not a one size fits all. It doesn't work like that.
Yeah, I've never tried, negative risk reward. It never made sense to me, and
Mhm.
it's almost like it's almost embarrassing because I've been trading for 7 years, and it's like the last 6 months that I've started thinking about negative risk reward, because I've been so in the mindset of like, in the beginning it's like you need at least 3R. If you can't get 3R, then it's not worth taking the trade. And like that
Exactly.
was such an important part of my risk management. Like 3R, that because I remember reading Mark Douglas's Trading in the Zone, and um, he had a trading practice he wanted the reader to go through, and he said like only look for trades that are 3R, no less. And I'm like, oh, okay, so that's what I need to do. And then I read about risk management and all of that, and understood that, okay, so you have to have a positive risk to reward. If you don't have a positive risk to reward, you're not profitable. It's like
Mhm.
you flip a coin, it's 50% win rate, but if you win twice, when you win, then you're going to be profitable. But what if you flip a coin that is heads 80% of the time? Then you
Mhm.
don't have to have double the profit.
Yep. That's the thing. The thing is, at different risk reward levels, there's a different win rate that accompanies with that shorter TP, and that is different for every setup, every strategy. And it's you have to measure it for your strategy, what is most profitable. And that may be high risk reward, like I don't go for negative, at least not in my main strategy. um, but that may not be the case for everyone at all. It doesn't mean anything for the profitability for another strategy. What works for me is has nothing doesn't say nothing about anything else, anyone else's strategy.
Seems to be some strength versus the dollar here. Let's look at your USD. Should probably move higher. Yeah, so it does look like your USD is breaking out here. I do think that and we have a double bottom here on the daily. It's a very obvious W here in the 4 hour as well. I think we might see some strength from EU here, and going forward, my trade plan, because I'm not going to be able to short this. I can't short a daily W, right? So even if it's a scalp, but I will be looking at this probably. Probably in this week, in the next couple of days. We do have, what do we have today? That was this morning. Tomorrow we have consumer confidence. That is that Germany? No,
um
something
no, that's dollar.
something with the
Consumer confidence, that's dollar news.
no
We have
GFK. That gotta be the euro.
Oh, okay, then I don't have that on my list.
All right, so we
I
have these
only have
20. So
Mhm.
I think we have quite a lot of catalysts here for EU. There might be a shift here. Yeah, I'm gonna be betting on this move in the coming days. Get a lot of comments here. Let's go through the comments.
There's a few comments about the ATR. Perhaps I should address them before we continue. Munit Production says, for my experience, the ATR doesn't change much when you scroll through a chart. Well, that is correct. The ATR, the average true range of a time frame, doesn't have to be the daily, can be an hourly, can be an H4, is basically the average range of that time frame of that candle, of the one H4 or 1 hour, a 4 hour, 1 day, etc. And that doesn't change very quickly because it's an average. As you know, uh, when the average, it has, it changed a lot for it to actually change the average. It changes slowly depending on the value. Of course, you can have the ATR at 5 That meaning that it will take the last 5 bars and give you the average. But you typically, I think the default setting is at 14 or 20. And that means that you're going to have an average of the last 20 or 14 bars. And you can understand that even if you have a little bit of a bigger bar today, that's not going to change the ATR significantly. So that is correct. It is something that changes slowly depending on what value you have on the ATR settings. And there is another one, I think, this one. Let me see. I think it's the times volatility. The same person saying there is times volatility is low, and you can see smaller candles, but the ATR doesn't change. Yeah, it's because of the same reason. It's an average, and the market may have changed. That can happen not only on smaller volatility, but also higher volatility. You can have NFP or interest rate coming out, and the market does 300%. Doesn't happen very often, but it can do 200%. And that is way more than the average. And that is logical because today is that day, in any case, is a different day. It's not an average day, right? So the average range only applies for an average day. So, but you can use that information if you know, okay, it's not going to be an average day. It's going to be much more than an average day. Then you can have an idea, okay, today is going to be shooting much more than that line given by the ATR. And the other thing you can do is you can look back at, let's say, the last 10 or 20 times NFP came out. What was the average range of NFP? What was the average ATR reading on NFP days, right? So now you're getting information. What can I expect on NFPs, right? Because you need to know what is the indicator telling you, right? So you can use that information and you can assume, or you can already start assuming that there's edge in there because you know how far on average NFP might move, right? And you can go even further. Say, when is it? You can differentiate between days that it did not surprise and days it did surprise, right? Given, I don't know, the first 5-minute candle, right? Because if there's a surprise, it usually gaps and has a huge 5-minute candle, or maybe a 15, or 1-minute candle. And by using those differentiations, you can filter, you can group or make subsets of days NFP has surprised, days NFP hasn't surprised. And if you know that, you can start knowing by reading price action as the news is coming out. You say, okay, today is NFP. It's likely, based on my data, to do 170% today, for example, right? So, and you adjust your TPs based on that if you're in a trade. And if it surprises, and let's say you investigated that and you have data on that, you can say, okay, after 10 minutes, 15 minutes, say, today is or isn't a surprise day. That means that given my data, the expected range for today should be this and that, right? And that's data-driven trading, right? You're not just guessing, okay, this looks nice. No, you actually have data whereupon you're basing your expectation. It's based on something, and of course you might adjust it discretionary based on structures, EMAs, whatever indicator or price action structures you might be using. So I think it's good to be using. I think ATR is one of the best indicators out there. It's very simple, but it's very powerful. I use it every day to form my expectation about the market's range for this day.
So I just closed the AD USD trade here. You can see that I had my TP here. It got front ran by like the smallest move possible. I looked at the 1 minute and I saw that we had that. It just didn't really like the fact that we front ran that level this close. So I closed the trade up market at this level. So like right below half an hour trade. So still good trade, winner. Pretty quick one. I mean, I entered this one less than an hour ago, about 30 minutes ago. So that was a nice trade. Made a half an hour on that one. 80 cat. I'm hoping that the 1 hour candle can close above entry. I have increased I raised my stop loss a little bit because that's the move that, again, like this is the move that this is why I want to have a wide stop loss. And then when the move already happened, I can limit the loss of that trade. What I need to do now, though, is I need to make sure that I'm not getting front run on this one, because that just happened on ADUC. So my PB should not be there. It should be at that level. I'm going to be adjusting that with. And then if you look at the actual number, it's 91,030. And I never want to put it at even numbers. I always want to put it like one tick below. Preferably I want to put it at 27, but that's not going to give me a very good risk to reward. So I'm going to put it at 29. I'm going to be adjusting that in MetaTrader. So right now I feel like overtrading was the right decision today. I think that's amazing. Alex is muted. Let's unmute him. Welcome back, Alex.
Oh, I'm sorry.
Overtrading, you know, I'm still muted.
No,
You're
you're
not
not
muted.
Not anymore.
Okay, well done.
Thank you.
Okay, that's all I wanted to say.
So 40K giveaway. We're not going to do the 40K giveaway today. We're going to do it next Wednesday. And next Wednesday is going to be the big giveaway, the big celebration. It's going to be inviting some people. We're going to do some, I don't know. Maybe we're going to dress up. Probably not. We've had a lot of comments on merchandise and hoodies. I can't promise anything because we haven't set that up yet. But if we can, then I'd like to be able to offer that in that one. So yeah, that's gonna be a fun one. This is I don't like that move.
We might have the trade on EU finally. Now we've had that push above that EMA, and now it's closing hopefully below it with a wick.
Yeah, I'm waiting for prices to reach a little bit higher, but yes, it may turn around because it is reaching that ATR level. You know, this is the place where the buyers start taking profits, those who got in at the beginning of the session, and that may be taking the steam out of the price action, and that may be all it needs for it to start transitioning back to bearish.
Yeah,
so you want to short this?
I got back in. There you go. I'm gonna add my half an hour. It's already taken a full hour today, so adding half, that's 1.5. Then I'll be down if it does take me back up.
I'm down 4R, which is okay.
Chips for you. 4 hours is nothing. If you tell me 30 hour, I'm like, it's a good day for you.
No, 4R is nothing significant for me. But I still need to wait for it to show me, give me those structures. So I still have about, what is it? About 3 hours, a little less than 3 hours for it to signal. And I was already measuring. If I do get a signal, it would be probably one signal will give me probably around, given the structures the current structures, it will probably give me around 10R. So I only need one signal, and of course it to be a winner, and I'll end up the day in profit. And hopefully it will give me not one, but maybe 2 or 3. So we'll see. We'll see.
So I'll be, you see that I'm adding a lot of alerts on TradingView here, and I like moving my stop loss up with price actions. So what I'm going to do here is when we break these highs, an alert will go off and it will say stops higher. So basically what I'll do is I have this alert. When it gets hit, I'll get an alert on my phone or my watch, and it says stops higher. And what I can do then is I can put I want to have the stop loss here. So what I'll do is I'll already put this in, and I'll write this as next stop loss. So if I'm, let's say I'm on the beach, whatever, and I'm trading, and I get this alert goes off. I have the horizontal level already on here, so I can just open up Trading View. I'll open up Trading View, and then I'll just copy this one right into MetaTrader, and it takes just a couple of minutes. Yeah, and I got to be honest with you guys, like this negative risk to reward approach is it's working wonders for my portfolio, and my trading right now is it's surprisingly effective. I must say, surprisingly effective. It's good. It's interesting to see. It's interesting to see how this will hold up in 4 weeks. So I've done 1 week. This is the second week, and then I'll do a couple of weeks extra, and we'll see how it holds up. I'm still very interested to see what the relationship will be between taking half an hour trades and 1 hour. That's going to be very, very interesting, because I don't know, like I still have a hard time wrapping my head around negative risk reward. Like I would it makes more sense with 1 hour, but it's very easy to test. All the trades I'm taking here, what happens if I just move that TP to 1 hour instead?
Yeah, it's going to be very interesting to see how that that measurement you're making, those findings that you're finding in your data, how they turn out to be. Is it something consistently better, taking that half an hour or whatever TP you're using now that is smaller than before? Because the more trades you're including into your analysis, the more confidence the value that it gives you is actually telling you something, right? Because as it should be telling you the same thing after 100 trades, after 200 trades. And if it's not, then whatever you measured when you had only 30 or 60 was just a fluctuation, and it's not shown on a bigger number, because in the end, what you want to measure is what's on the long term, right? After 500, after 1000, because that's what you want. But you try to approximate that by using whatever number is feasible for you, which is 1,000 trades is not feasible to do within a couple of weeks, right? So you use what you can use, what is available to you, what is feasible, so that you can get an idea, okay, what is it going to be long term? What is the actual number after 1 year, after 2 years, by extrapolated from the numbers you are measuring right now? So that's very interesting to see how that number, that profitability, that graph you showed us a few weeks ago, is the distance keep on, is it still growing? Because if there is a consistent difference in expectancy, the distance between those two lines should keep on growing and growing and growing, even as you include more trades. Because if it's not, then there's something is not right with the conclusion, right? And
Yeah,
so
and
it's very interesting.
Yeah, I mean, I think everything will be. Everything. I think it's going to be easier once I get used to used to having a higher win rate. It might sound weird, but I gotta make sure that I'm a bit more relaxed. I feel like right now I'm not really that relaxed. I need to make sure that I'm approaching it exactly the same way as I did before, and I feel like last week was good. if this week can be as good, then I'll feel a little bit more safer, a little bit more, a little bit more relaxed.
Yep, yep.
Feel
The
like
thing is,
that's
you expect, you're having issues with it because you expect that the optimal value for your TP placement, you expect it to be logical. You expect it, to make sense. But what if it doesn't need to make sense? What if it's just, you know, because how do you know something makes sense? Because you have seen it before, because it's familiar to you, because you have, heard other people using it. But what if you don't have those reference points to compare to? You don't have someone who is profitable doing it negative with a negative risk reward. What if you have much more people around you that are aiming for 3R on each trade, things like that? Then it's going to feel different, but it doesn't mean it's incorrect, it's wrong, right? Because that is your that conclusion you get, that it doesn't make sense, that is based on what you know. And maybe, your reference that you're comparing this to, is this, you're measuring something completely new to you and your environment and your experience. And that's why we all should just follow blindly the data, even if it
yeah,
doesn't make sense, even if it doesn't isn't logical, it feels wrong. But if the data is telling you it is profitable, man, you audit to yourself to find out if that is indeed the case. Because if it is, you just found your edge. What you know n- if the data is telling us where the edge is, it doesn't make sense for us to expect that it not only to have the edge to show us where the edge is, but also for it to make sense to us. It's difficult enough just to get the edge.
yeah,
And
yeah, definitely.
we shouldn't be too selective with how the edge comes, where it comes from, when it comes from. If we only need the edge, and once you can measure it, if you can measure it, then you can, if you can measure it in a big data, big number, then you can probably execute it as well. And if you can execute it, you got yourself a new trading plan. Just got to frame your rules, to fit that and change your workflow. And to come back to today's theme, you need to plan to catch that edge, right? Make your
Yeah,
workflow in such a way that you're ready, right? Because having success is for a big part planning. Having, preparation is a big part of being successful. You can't just come and swing it. You have to prepare and have an idea of what you're looking for, when they occur more often, and how are you best to be how are you going to be ready to catch those trace, those signals that your
yeah, it's
data
like
has told us.
yeah, it's like when somebody says like, yeah, that guy got lucky. Well, he probably planned it. He created his own luck. He planned to be in an environment where he got lucky. If
Correct.
if I get lucky on a trade, let's say I take a trade and it's a massive winner. I mean, yeah, in a sense, I got lucky, but I planned that trade. So I created
Hmm.
my own luck, and that's basically what we're doing. We're creating our own luck and putting our put putting the odds in our favor, basically. Guys, let us
I,
know
I think
again.
I, I think we
Yeah, go
said
ahead,
once,
go ahead.
one of us, I think it was, I'm not sure who it was, the more you prepare, the luckier you get.
Yes, yes, exactly. I think that was you.
The
Yeah,
luckier.
yeah, very, very true. All right, so today looks like a quite a profitable day. However, I'm very sad to inform that this trade was taken with half of what I was supposed to take, which is actually not a terrible idea because I was actually double exposed to AUD. I took a long on AD CAD and a long on AD USD. And look at this one. Look at this one run. So this would be a 1 hour candidate, right? Because 1 hour is up here. So if it hits that 1 hour, this will be a 1 hour candidate. But again, I think so. No, when I'm done testing 1 hour, I'm the third test I'm gonna do. Well,
I
actually,
know
it's
where
gonna
you're
be
going. I know where you're
yeah,
going,
yeah,
and that's the
yeah. It's
right
gonna
way. That is the next step. I know it. Go ahead.
it's FTA, right? Yeah, so exiting at wherever the FTA is, like exiting based on just a so basically taking trades that are between a half an hour and 1 hour, not having a fixed hour. Just as long as the trade is higher than half an hour and not higher than 1 hour, I'll take that trade.
Yeah, I have had that process I recognize that process where you go for a fixed risk reward and you find it's different where you expect it to be, where it makes sense, but that's what the data tells you, and then you end up finding that it's not the fixed risk reward ratio that is optimal. It is if
Yeah.
you come back to the price action. At least that was with my case. It may not necessarily be the case with everyone, but I started having my TPs on based on price action, on structures, went to those fixed risk rewards, and then in the end came back to the structures, but based on the peaks that I measure, because that's what I did. I measured um, different TPs, and I created the equity curves of each one of them, and based on that I chose where more or less would I want to have my TP based on the structure. And that's so that I combine looking for the structures that make sense within the profile of the risk reward TP placement, right? The risk reward that a TP placement gives me, but with combining those ideas, and that's where I found the optimal place to be. But it may be different for everyone. But I recognize that a lot.
So we now had a breakout. I got the alert set, so I got the alert saying move stops up, and this is now my new stop loss on that one right there. Now, depending on what price action does here, so this, let's see. Yeah, so if this 50-minute candle closes like this, no problem. I'll keep the trade open. But if this 50-minute candle just like closes down here as a bearish candle or big wick, I might just close this trade, because this is the move that I'm trying to catch. I don't want this local trend to break. I don't want that low to break. So actually I think the new stop loss is in a good position. Then we have the NCD CHF trade is about to break out here. It's about to hit that stop loss. So it's about to hit that alert, and when that alert gets hit, I'll move that stop up again. And when that's done, I'm basically safe, safe for the day. I've done everything I can to make money today and to manage my risk. And it's been quite a long time since I had multiple TPs getting hit on live stream. Like now that I'm trading and I'm having like one winner every day, I'm getting used to seeing TP getting hit, which is a very different feeling than from like having like loser, big winner, loser, big winner. Like it's I mean, obviously people like making money, people like seeing your stop loss, your TP getting hit. But you have to get used to that as well, because like now every day I'm getting alerts of like TP hit, TP hit, TP hit, and it kind of
It can also be a bad thing.
Yeah, because I'm used to seeing stop loss. I'm used to just having stop loss orders getting hit all the time, and then all of a sudden I have like a 4 or 5 hour winner, and then pays for all the losers. But now it's like I'm just winning, and that kind of is nice, but I'm getting.
It's risky.
Like
it's risky because you may get
risky.
that. Yeah, you may get that invincible feeling, and that's very risky. When you feel invincible, you get less respect for risk, and it's the same with people going on open sea. You got to respect the sea, right? There's a risk there. You got to respect what you're dealing with, and as a trader, it's the same thing. you got to respect the risk that you're taking every day. And when you stop respecting that, stop being aware, thinking I'm gonna be hitting TPs anyways, because that's what I've seen in the last couple of days. That's when you start losing it.
Yeah. No, you're absolutely right.
Henry has good. I think it's a question. It says TP based on structures like EMAs, round numbers, Fibonacci, support level, resistance level, or OB. I don't know if it's a question or not, but if it is a question, I would say yes. And I have tested different kind of these, not all of them, to be honest, but I've seen that OBs are best place for me to put my TPs. And of course, there are many OBs, different time frames, so that's something to go more deeply on another time. But OBs to me that's to me. It may not be the same for you, but that's to me, that's the best place where I put my TPs, based on OBs, also having an idea of what the typical range of the week is, of the day, of the session, and combine those things to help me choose which OB, because there are OBs below us, above us, different time frames. So it's not only OBs, you got to know which one and which time of the day. That is also something very um, underrated, right? Because the time of the day, which is also, it talks about the range. It has something about the range. It's a different perspective of the same thing. The range is, you got to have an expectation of how much more the market can go for this session, for this bar, for this day. But it's the same thing when you actually, I lost the train of thought.
Yeah, so
Jonathan.
I'll tell you that I actually closed it. I actually closed this trade right here because honestly, we've just had a conversation of me saying, I'm getting confident. I'm probably getting a little bit overconfident, and when I do get overconfident, that's the time when I'm I basically I need to take profit. I need to make sure that if I'm in profit, I need to secure the trades and take a break, and that's what I'm doing right now. I'm looking at NCDCHF and we're hitting a resistance here, and on the 4 hour we're actually hitting this level, and this to me is the most obvious resistance and the most obvious TP for me. So I've actually exited this trade right here, and I feel good about it. And even if it hits that original TP, I'd feel pretty good about this one as well. And now I'm just waiting for AD CAD to move higher to close that one as well. And if I manage to do that, I'm going to be up quite a lot today. And with that, I probably feel like I need to take a step back
Dial
and
down.
reassess.
Dial down your activities.
Yeah, because I feel like I'm explaining everything I need to do on these live streams, but I'm not following my own advice. So that's what I feel I need to do. I need to follow my own advice more often, which is in this case, I'm up about 2K today, which is
Nice.
fantastic.
That's great.
I can't complain.
Yeah, about that lost train of thought. No, what I was going to say was that you have to use, not only, it's the same idea that you have with the ATR. You can have an expectation of the volatility that's still has to come in. But when you have different, it can also help you to decide on a shorter time frame what TP should you be aiming. Let's say you not only framing it within a day for an intraday trade, but also let's say you have a trade that is going your way, right? But you only have 4 hours for it to hit your TP, because the end of the day where you end to have to close that position is nearing by, or maybe it's the news. The news is coming in and it's 2 hours from now. So you have a time stop, not a stop based on the price, but based on time. So you have to hit what best optimal level within a certain time. That's where you can use the same ATR to combine and see, okay, if we are, let's say, 3 hours before the news, what is the typical 3 hour ATR, right? And that can give you an idea, okay, what should I expect? And that can help you decide which OB to target. I was distracted right there trying to keep an eye on the market and two other things, and I'm not good at doing all of that at the same time.
Guys, we're at 2 hours, and the event absolutely following your own devices is not very easy at times. I mean, it's very easy to tell others how they should live their
Yes.
lives, but it's very difficult to actually live what you know walk. Is it walk the talk or talk the walk? Is walk the talk, right? You walk the
Walk
talk.
the
I think
talk.
that's
Yeah.
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 Here we talk the walk.
Yeah.
Yeah. Okay, guys. So we're. I think it's time to kind of what it was. Man, I don't know what I'm saying.
I want to invite everyone to join us because we're going to be having another session of Market Outlook, weekly Outlook in Discord. So if you don't have your account yet, if you're not in our Discord community, you're missing out. You're really missing out.
Yeah.
Go get your account. You need your account with the 5ers, and in your dashboard you will find that link to allow you to get to that community, the Discord community, where we will be working with you to get the best out of you, the best trader you can become. Today we will be in about 45 minutes. I will be doing a workshop. We have 5 of those every week. So I invite you all to join us for another session with me, basically.
Oh, I got ADK gonna hit that TP as well. This is a fantastic day right here. Fantastic trading day. Absolutely amazing. Let's see if it gets hit here. Can we hit a live? Can we get that hit live? Let's just another pusher upside. What I'm gonna do here is I'm just gonna move my stops to entry right below
How many
that.
TPs already do you have?
I think 3, 4 today.
Wow.
Crazy.
Yeah.
Dude, it's crazy. it's like the same amount of trades that I usually win in like 1 or 2 weeks. I made in one day. It's crazy. Yeah, I'm gonna move. Let's see. I'm gonna move my TP to my stop loss to entry or right here, and then we'll see. I'm just gonna let it go instead of taking profits. I'm just gonna move that stop loss to. What am I saying? If it breaks out here, yeah, let's see. I'm moving that stop loss to entry. And let's see. I'm just waiting for the very first. Yeah, okay, I'm closing it here and we'll call it a day. Amazing. Okay, good. Nice.
It's very interesting on EU. It's breaking higher and still forming outside bar on the 5-minute. That is interesting.
Very strong.
Yep.
All right, guys. That's it for today. Tomorrow we're gonna have an exciting session where we I can't remember what did I plan for tomorrow. Can you remember?
Not on top of my head right now.
No, I did plan something. Yeah, I think actually let me see because which one is it? It's scalping or swing trading. Yeah, we're going to talk about scalping, like scalping versus swing trading, and the different trading styles and different personalities, and like should you be swing trading, should you be scalping, should you be day trading, and what type of personality fits that style the best. All right, guys, thanks for joining today. I hope to see you all tomorrow. It's going to be a very interesting session, interesting conversation. And the only trade that I have open right now is Euro NCD, which looks terrible. But honestly, with the winners from today, I don't care. Like, I'm just gonna keep this one open. I don't care. All right, guys. Thank you for joining, and we'll see you all tomorrow.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the